Let's break down one of the most widely used indicators in technical analysis today, the Relative Strength Index, or RSI. Now, RSI isn't trying to predict direction. It works to answer a simpler question, actually. Just how strong is the current trend? We can think of it kind of like a speedometer for price. So RSI is a momentum oscillator, meaning it measures the speed and magnitude of price moves. It moves on a fixed scale between 0 and 100 based on the relationship between recent gains and recent losses. Typically, when RSI is rising, bullish momentum is increasing, and when it's falling, bearish momentum is increasing. So again, it doesn't tell us where price is going, it just tells us how strong the move has been. So more confirmatory in nature, potentially. Now, there are a few key levels that we need to pay attention to here. The 70 level is the overbought condition, the 50 level, the midpoint on this oscillator, and the 30 level, the oversold condition. Now, we are looking at a chart here of the SPX over the last 12 months or so, and we're assigning some interesting trends within price and the RSI. Notice here when we ran to this 7,000 level in the beginning of January, we stuck there. We did not get price to move through that level for a period of time. In fact, January we were there at the beginning of the month, and then we waited all the way till the end of February and we couldn't break through it, and we actually pulled lower. What's interesting from the RSI below us here is a line that we were kind of running the RSI into, an area of resistance in the actual RSI. The fact that we were making these levels of new high prices up here, but not moving above the same level we had achieved previously, was perhaps a little bit of a heads up. And in fact, notice how as I move my crosshair through the RSI, we kept going sideways in price, but the RSI was dropping, meaning we had lower highs and lower lows. And while it took until the end of February for our trend in price to begin moving lower, the RSI may have signaled that a drawdown or pullback was coming. Now, this is not always going to be the case, of course, but this is one of the ways we can look at the RSI in the short term here. Additionally, what's interesting on this chart is one of the reminders of overbought and oversold conditions. Above the 70 line, as we have outlined with my rectangle here, we have the S&P 500 in overbought conditions, which are considered to be bullish by nature. But a lot of traders lean into the concept of overbought, believing that it must lead to sells. Now, yes, it led to a pullback to the 50-day moving average in purple on this chart, but what it did not to this point do was lead to a new short-term downtrend per se. So overbought conditions can persist longer than we would expect, and oversold conditions can persist longer than we would expect. Additionally, oversold does not mean necessarily buy. In fact, many traders who rely on the RSI consider movement from oversold out of oversold conditions, that is to say from below 30 to above 30, to be the signal that they would be interested in buying in, and above 70 to below 70 line becoming an area where traders might consider selling some of a strong position or a position that may have been working for them. Now, further, in the midst of these long-term uptrends, or in a period of time when the trend is really running one way or the other, the RSI on pullbacks commonly will not pull back to those 30 levels. You'll notice, in fact, that on this most recent pullback in price that saw the 50-day moving average, we only pulled back to about the 40 level. Now, many traders will look at the midline, the 50 level, as the decision point, so to speak, on any pullback or rally in a bearish trend. So a pullback in a bullish trend to the 50 line could be considered to be into oversold conditions, and thus possibly an area where a trader would then look at price and say, all right, now I've got a reason to expose new dollars. And then conversely, moving out of oversold conditions under the 30 line and rallying into the 50 line becomes an area where traders might think, hey, we have got to take some off in here now, as we might be in a bearish regime as it relates to price action. And so RSI does not dictate new price levels. It can't predict the future for us as traders, but what it commonly can do is confirm price levels for us and confirm the health or strength of a given trend. And that's really what a majority of traders are probably utilizing the RSI for, is more of confirmatory or confirmation in nature. Now, you can follow me on X at Kevin Horner CS, and make sure that you're subscribed to the Schwab YouTube coaching channel that we call Trader Talks.